Have you noticed how every major shift in history begins quietly? No sirens, no headlines, just a few smart players moving early while everyone else is distracted. Let me ask you something uncomfortable right from the start. What happens when money can be printed overnight, but the materials that power the real world cannot? What happens when Wall Street keeps staring at screens while the physical backbone of the global economy starts running out? That is exactly where we are right now, and almost nobody is prepared for what comes next. Markets love to underestimate scarcity, especially when it hides behind complexity. Cash shortages can be solved with policy. Supply chains cannot. Right now, companies that understand this distinction are not waiting for price spikes. They are locking down supply at the source, entire mines, long-term contracts, private access. Not because metals are fashionable, but because availability itself is becoming the asset. This is how the smart money always moves. Quietly, early, and with conviction, while the crowd debates headlines that no longer matter. We have seen this movie before. Metals can sleep for decades, ignored and dismissed, before they erupt violently. Gold did nothing for years, drifting sideways, boring everyone. Then suddenly it exploded, breaking long-standing records and leaving skeptics frozen. Silver was even more dramatic, moving almost vertically, shocking markets with a surge that rewrote expectations. These moves were not random. They were pressure releases after years of accumulated imbalance between supply and demand. Inflation stayed stubborn. Recession fears lingered. Export restrictions tightened. One domino after another fell into place, creating the perfect storm. Those who held physical metals were not lucky. They were early. They understood that when fear arrives, it moves faster than logistics. But here is the part most people miss. These explosive moves do not end the story. They rotate it. Capital never stops moving. It simply looks for the next bottleneck before the crowd notices. That bottleneck today is not gold. It is not silver. Those trades are already crowded. The real opportunity forms where demand is unavoidable and supply is fragile. The metal that sits at the center of economic growth, electrification, and technological expansion. The one material without which the future simply does not function. That metal is copper. And what is happening behind the scenes right now should make you pay very close attention. While most investors were hypnotized by shiny metals, copper has been climbing quietly, driven not by speculation, but by necessity. This is not a retail frenzy. This is a structural shortage. Global demand already exceeds supply by millions of tons every single year, and that gap is widening. When demand outruns supply at this scale, price becomes irrelevant. Availability becomes everything. And that is why some of the largest technology companies on Earth are no longer buying copper on the open market. Instead, they are resurrecting mines, literally bringing dead projects back to life. Think about that for a moment. One of the most sophisticated logistics and data companies in the world decided it was safer to revive an abandoned copper mine than to trust future market availability. This is not speculation. This is fear of shortage. They are even deploying experimental extraction technologies, using bacteria and chemical processes to squeeze copper out of rock that was once considered waste. That is how tight supply has become. This shift exposes one of the biggest illusions of the modern age, the so-called cloud. There is no cloud. Every digital action lives inside massive concrete buildings filled with processors that consume enormous amounts of electricity and generate extreme heat. Artificial intelligence multiplies this problem. A single AI query can consume dozens of times more energy than a simple search. Cooling these systems is now the limiting factor, and nothing dissipates heat like copper. Without it, the AI revolution hits a wall. Mining cannot respond quickly. High prices do not magically create supply. Exploration budgets were cut more than a decade ago. New discoveries slowed. Bringing a major copper mine online takes 15 to 20 years, assuming permits, infrastructure, energy, and political stability cooperate. Meanwhile, existing mines are aging, and ore grades have collapsed. What once yielded rich concentrations now requires moving entire mountains for scraps of metal. This is not a cycle. This is depletion. Now layer on electrification. Electric vehicles use several times more copper than combustion engines. Wind turbines, power grids, transformers, data centers, all competing for the same limited supply. Governments are spending hundreds of billions modernizing grids that were never designed for this load. Copper demand is becoming inelastic. People can delay luxury purchases. They cannot delay wiring civilization. Prices will adjust because they have no alternative. This is why copper behaves differently from precious metals. It does not move on emotion. It moves on necessity. And when necessity collides with scarcity, the result is not volatility, it is repricing. The market will not ask permission. It will simply move. Those who understand this are positioning early, not chasing headlines, but securing exposure before the realization becomes obvious to everyone else. History shows what happens next. The only question is who sees it in time.